All right, so today we've got a real head-scratcher for you. You've got one of the world's most famous investors with a very, very strong opinion about one of the world's most famous stocks. But here's the thing. His actions just don't seem to line up with his words. So let's break this down.
So on one side of the coin, you've got Michael Burry coming out with this. Talk about a direct hit. He's not mincing words. He thinks Tesla's market value is completely absurd. And then he drops this, the complete opposite of what you'd expect. He's not betting against it, so it gives. What's really going on here?
Okay, so let's really dig into this surprising confession. Why would the guy who basically wrote the book on calling market bubbles come out and publicly say he isn't betting against what he thinks is the next big one?
Yeah, and let's be clear, we're not talking about just some random guy on Wall Street. This is Michael Burry. His opinion carries so much weight precisely because he saw the 2008 housing crash coming when pretty much everyone else was completely blind.
His path to becoming a legend is, well, legendary. He started Scion Asset Management, but the real story, the one that made him a household name, was his massive bet against the subprime mortgage market. He won, big time. And ever since, he's been this go-to figure for these super bold, usually bearish market calls. You'll see him making headlines with his thoughts on X or his Substack.
So you can imagine when a guy with that kind of track record throws around a phrase like ridiculously overvalued about a company like Tesla, yeah, you better believe people stop and listen.
And look, he's not exactly whispering this in a back room. He's been super public about it. This is classic Burry, right? He's sniffing out what he thinks is a major market bubble. What's really interesting, though, is that he's actively shorting other tech companies right now for supposedly fluffing up their AI profits, which just makes you scratch your head even more about Tesla.
And that right there, that's the million-dollar question, isn't it? If he's so dead certain, why isn't he putting his money where his mouth is? And the answer, folks, reveals a really, really important lesson about how the market actually works.
And that lesson, it's all about the massive difference between having a belief and making a bet. They might sound like they go hand in hand, but trust me, in the world of high-stakes finance, they can be a universe apart.
Okay, so to really get this, we gotta quickly talk about short selling. What is it? Well, think of it this way. You borrow a stock you don't actually own, you sell it immediately, and then you pray the price tanks. If it does, you buy it back on the cheap, return the borrowed stock, and you get to keep the difference. It's literally a bet that a company is going to fail.
This chart really lays out the whole dilemma perfectly. Over on the left, that's the belief. That's the analysis part. That's Barry looking at the numbers and thinking, whoa, this thing is way overvalued. But then, look at the right. That's the bet. That's the action of shorting. And this is where things get hairy. Because with shorting, if you're wrong and that stock goes up instead of down, your losses can be, well, infinite. There's no ceiling. So it's not just about being right. You have to be right at the exact right time. And it can cost a fortune just to keep that bet open.
Which brings us right back to Tesla. Man, if there was ever a stock that's a perfect example of why this is so tricky, it's this one. Tesla's history is a roller coaster that shows exactly why a strong opinion doesn't always lead to a short bet.
Just take a look at this number, almost $500. Can you even imagine being a short seller, betting against the stock, and watching it just climb and climb and climb to that height? Every single dollar it goes up is another dollar you're losing. It's a recipe for absolute financial ruin.
But, okay, Burry's not just pulling this out of thin air. For all those crazy highs in the past, right now things are starting to look, well, a little cloudy for Tesla.
So check this out. Tesla put together its own average estimate for how many cars they'll deliver in 2025. The number? About 1.6 million. Now, that might sound like a lot, but let's put it into perspective.
So what's the big deal with 1.6 million? Well, it actually means the company is looking at its second straight year of falling deliveries. We're talking a drop of about 8% from 2024. And for a company whose stock price is built on the idea of explosive growth, that is a massive red flag.
And look, these delivery numbers aren't happening in a vacuum. They're part of a much bigger story. You've got ferocious competition, especially from Chinese EV makers. You've got the reputational fallout from the CEO's political comments. It all adds up. These are the headwinds that a guy like Burry is definitely looking at.
Okay, so let's tie this all together. It's time to look past that simple clickbaity headline, right? The one that just says Burry thinks Tesla is overvalued.
Here it is. This is the whole takeaway. An expert's opinion, no matter how strong, is not always a trading signal. You can be 100% convinced of something, but that doesn't mean you should bet the farm on it. The risk, the timing, the cost, that's a whole different ballgame.
And this right here,
This is a super powerful way for you to think about financial news from now on. First, what's the actual opinion? Okay, Tesla's overvalued. Simple enough. Then, what's the action required? Well, it's a super risky, high-cost short. Third, what's the context? Tesla's insane volatility and all that competition, and that leads you to the real conclusion. An opinion and an action can be two completely different beasts.
So this whole Michael Burry Tesla paradox, it's really a masterclass in critical thinking, isn't it? It's a reminder that behind every bold headline, there's always a deeper story about risk and strategy. It really leaves us with one crucial question to ask ourselves the next time we see some huge prediction. What is that headline really trying to tell you?